index funds represent 29% of the fund market in Japan and 50% in the US. That's a very, very large number. And it also means that if you are watching from the US and you have any fund in your portfolio, half of you have actually index funds and a third of you have if you're located in Japan. Of course, you've heard of indexes. You know the S&P 500, the Nasdaq 100, the TOPIX or the Nikkei 225. But do you actually know what kind of indexes they are, how they're calculated, what their holdings are, and whether or not they fit your investing strategy? With the stock market going higher and higher everywhere you are in the world, it's a very good time to have a look and understand what those indexes are and whether or not they match what you want to do with your money. Sounds interesting? Let's dive in. An index is a tool for measuring change in a group of representative data. What does that mean? More specifically, if we are talking about investing, it's basically a way to measure the price performance of a basket of securities using a standardized method. And you can have indexes about everything. Stock, bonds, commodities, can be industries, can be geographies, can be part of a market, a whole market, you name it. If there is a way to group some securities together, you have indexes. And you have many indexes, but mainly three types. You have the market capitalization weighted or market cap weighted index, you have the price weighted and the equity weighted. We're going to go through them very quickly before we dive into the Nikkei and the TOPIX. Capitalization weighted indexes or market cap indexes basically give more weight to securities that have the largest market capitalization or market value, and they are usually used more frequently by asset managers. The calculation can be quite complicated, but we're going to make it very, very simple. First, we're going to have the sum of all the market values of all the components in this index, and to get this market value for each of the stock, we multiply their stock price by the number of outstanding shares. We do that for every single component, add them together, and you have the first part of our equation, and after you have a divisor, and the divisor has been set by each company that has created the index, and that gives you the index value. So that's a very simplified way of doing it. And what kind of indexes are actually following this type of calculation? You have the S&P 500, you have the Nasdaq, you have the MSCI family, and for Japan, you have the TOPIX. So very, very well-known indexes, and there are many more, but those are the market cap weighted indexes. Now, let's go to the price weighted one. So here the definition is relatively simple. The higher the stock price, the higher your weight inside the index. And the way it's calculated is they are taking the sum of all the stock prices of all the components in the index and they divide it by the number of components in the index, and you get your index value. Sounds very simple. I simplified it as much as possible, but that's the way it works. So the higher your share price, the more weight you have in the index. And here, the most well-known are obviously the Dow Jones, and for Japan, the Nikkei. The third one is the equal weight index. As the name indicates, it gives the same weight to all the components, and whether it's market cap or stock price. So to make it super simple, if you have 10 components in your index, each component has a 10% weight. And you have a few indexes available around that are using this very weighted or equally weighted approach. You have the S&P 500 equal weight index, and you have in the MSCI family some as well, and I selected two for you that are Asia focused in JPY or USD. So that rounds up the very short introduction about indexes. So now let's focus on what interests us today, the TOPIX and the Nikkei 225. The TOPIX shows the increase and decrease in market capitalization of all the companies listed on the first section of the Tokyo Stock Exchange since July 1969. Actually, the data goes back to January 1968, but that's how they present it on the website. The way it's calculated is also very simple and very similar to what we've seen, but I'm just showing you how they interpret it on their website. We're not going to go into the details again. What's really interesting is that this index has more than 2,000 components in it. Yes, it's a very large, it really represents most of the largest company in Japan. Now, let's look at the top 10 holdings. That's very interesting. We see the likes of Isuzu Motor, Takeda Pharmaceutical, Japan Tobacco, Nissan, Komatsu. So very well-known name, very well-established names. What's really interesting is that if we look at the sector, it's very diversified. We have automotive, we have pharmaceutical, tobacco, heavy machinery, trading and distribution for Sumitomo, and a tiny bit of technology. Now, if we look at the performances and forget the last decade, it's been really good in the past 5 years. Remember, this is all in Japanese yen because if we compare to US dollars, with the change in interest rate everywhere, the Japanese yen has been going down. So the comparison is not completely fair. Now, looking at the Nikkei 225, it's showing us the weighted increase and decrease in value of 225 stocks from the prime market on the Tokyo Stock Exchange since 1970. Its calculation is very easy because we are talking about a price-weighted index. So as you can see now on screen, very easy. It's the sum of the stock price of all of the components in the index divided by the number of components in the index. Now, what's really interesting, it's its component in comparison with the TOPIX we just saw. Here, the components are very different, especially the top 10. Number one, fast retailing, better known under its brand, Uniqlo, is one of the only two consumer goods together with Recruit Holdings. And after, you have mainly technology, so you don't see any automotive, you don't see any heavy machinery. That's very different from what we saw for the TOPIX. And its performance in the past 5 years is a little bit under the TOPIX, but it tends to change quite regularly. Now that we know a little bit more about the TOPIX and the Nikkei, we need to understand which one is best for you in terms of investment. And to do that, we're going to do a side-by-side comparison of both indexes. Let's take the obvious out of the way. One is cap weighted, the other one is price weighted, which makes it very different. In the terms of number of stocks, the TOPIX are over 2,000 stocks. Next year it's going to be reduced, that's why you have an asterisk, and it's going to reduce a lot of the number of stocks. The Nikkei has only 225, very concentrated. And the top constituent, the top 5 constituents are completely different, as we just saw. In terms of performances, if we look at 1 year, the TOPIX is still the winner. But if we look 5 years back, the Nikkei is completely crushing it. Now that we know the basics of the comparison, what are the strengths and the weaknesses for each of them to help you decide which one is good for you in terms of investment? So if we go back to our side-by-side comparison and our table, we see that the TOPIX is better representation of the overall market performance because it's broader. It reflects the size and influence of the companies in the index. The bigger the company, the larger the impact. And naturally, it adjusts as companies grow or shrink economically. On the flip side, it may not represent accurately the smaller companies or specific sector of the market like technology, like we've seen earlier. And of course, larger companies can have a disproportionate influence on the index. Looking at the Nikkei, it's easier to understand because the more expensive the stock price, the bigger the weight it has. It has a good representation of companies with higher price stock. So maybe companies that are developing better or have the eyes of all the investors, like the technology companies. On the flip side, it's skewed toward individual stock price, which overshadows the overall, the broader market. It's less reflective of economic size because it's more about stock price rather than the impact. And it's more susceptible to things like a stock split and a short-term price movement depending on something that's happening in a specific sector, in this case, the technology sector. So now has come the time to decide, TOPIX or Nikkei, for you as an investor. If we look at TOPIX first, it's a more accurate reflection of the overall market and the overall Japanese economy because it's cap weighted. But you have to be okay with some concentration risk because the bigger companies have a bigger weight and bigger influence on the index. On the other side, the Nikkei is simpler, it's more intuitive in terms of understanding how it moves around. But large established companies with high stock price are going to move things around, and it's also more concentrated. So if big companies like the tech companies move around a lot, you might be impacted positively or negatively. Now you know. If you want to invest in the broader Japanese economy and stock market, you go for the TOPIX. If you prefer a narrower selection of stock, you go for the Nikkei 225. And how do you invest in them? You do as usual. You go with mutual funds and ETFs. Let me give you a quick snapshot. If you want to have Japanese yen denominated one, here is a selection of a few ETFs and few mutual funds. What about the USD denominated one, you might ask? Actually, those were a subject of two recent videos that I'm showing you on screen, and I'm going to link down below so you can have a deep dive and more details. Between TOPIX and Nikkei, in terms of performance, in the short term, TOPIX is the winner. For 5 years, this is the Nikkei. And for the rest, it's up to your investment preferences. If you want to learn more on how to invest on those two indexes with mutual funds and ETFs, I've prepared those two videos for you to watch. If you like this content or learn something, please give it a like and do not hesitate to subscribe for more videos to come. Before you leave, click here or here to watch the next video. Thank you very much, and until next time, goodbye.